These are very sweet ways to take your swing trades instead of entering into the 15-minute again, or the 5 minutes, or the 3 minutes time frame. This will, especially when you're not good with all these scalp and swings, it always affects you, and then you really don't know exactly when to enter because of the time and pricing and because of the consolidation inside the smaller time frame. Quick disclaimer here: trading is very risky and carries a high level of risk. Anything said here is not a financial advice. Make sure you trade with money you can only afford to lose. Stay safe. What's going on, guys? It's been a very long time over here. For a very long time I've not been uploading due to some reasons. So in today's video, we're going to be looking at different ways of swing trading on different currency pairs with SMC, because most people have been like, they are not always available on the charts to day trade, so they have to hold for some time, hold for some days, so that they are not always on the charts and they are not always actively trading. That is still the same thing as swing trading. So in today's video, we're going to cover that and talk a little bit on divergence, though divergence is not a major focus here, just something I use with my students in the mentorship section. But then I'm just going to cover it here a little bit after discussing swing trading ways, the steps in which you can swing trade instead of taking day trades or scalping. Moving into SMC, most people focus on scalp and day trading. Most people have always seen that, I've always known they always day trade or scalp. Even me myself, I day trade. I rarely scalp though, but I day trade most of the time, and I'm out of the market for the day. But then for those that want to swing, it's still the same thing. Okay, just that the only difference is now you want to stay on the higher time frame. You want to stay more on the higher time frame than the lower time frame. Looking at Euro US now, we have a bearish scenario here, and then we let me go to the 1 month time frame right now. When you want to swing trade, you know that you want to use the 1 week. I'll advise 1 week, daily, and then 4 hours. So starting from the weekly time frame, we have a bearish scenario here, and then when we are bearish, what do we want to look for? Selling opportunities, right? That is it, selling opportunities. So when you want to look for selling opportunities, what do you want to draw out? You want to draw out your supply zones. You want to draw out your active supply zones, and you can start from wherever you wish. Let's say you want to backtest a little bit, you want to start from there. Yes, that is the first one, and then you can have more supply zones as price moves itself. We have a supply zone there caused by break of structure here, and we also have we have a lot of supply zones here. So this is another supply zone which got mitigated, that can be used for what's called swing trade. And we also have a supply zone here that became invalid as price was moving. You can see this became invalid, price broke out of it, and then went to tap into the second weekly supply zone. You can see that. So for that is how that is how it should be. And for those that love to take trades here, like a day trade or something, or scalp, definitely you'd have gotten something out of this supply zone right here. You'd have gotten something out of this supply zone, because looking at the drop, it's dropped, reacting from the supply zone, did 200 pips. You can see. So that is a very good and valid supply zone. A very valid supply zone. Traders would have loved to trade from and then take some profits out of. Then looking at the other supply zone, the extreme supply zone, still the same thing also. Tapped into, started dropping, and then you can see how many pips this guy did over here. This one is 300 or 404 pips and still counting. So that if you are a swing trader, in fact 200 pips is not bad for how many days? 1, 2, 3, 4, 5. 5 days. 200 pips is not bad. That's 1 week. If you held the trade for 1 week, you'd have gotten in the sell over here. And then if you held the trade over here for how many days? See, there's a lot of days over here right now. You have, you know, gotten like 400 pips. So for me, I would have loved to use divergence here, since that is my new entry, and I would have gotten in at the top somewhere here or here or here or here. But then, you know, I would love to scale in and then take in smaller time frame entries, since I'm a day trader. But if you are, you know, a swing trader, I think all your analysis should stop on the 4-hour time frame. You should stop on the 4-hour time frame. This week is a supply zone. You can take it as your entry, since you've gotten a break of structure from here. You know, I always say this, the week can also be a supply zone. I don't know if it's on my YouTube channel, I've been saying this, or telling my students. If the week is very long, see, you can refine it, take half of it, and then this will be your entry over here. Since you want to swing the trade, and then your stop loss is 46 pips to gain 200 pips. That is a little bit of 1:4. Very nice risk to reward. Simple as that. So back to this entry, you can see this would have been the entry after this break of structure, midpoints, supply zone, boom. So same thing over here also, but over here now, this is one of the reasons I moved to divergence, because you might not always get every pullback and every mitigation, just like this one here. You'd have been waiting for a break of structure, which has happened. Supply zone will be here, right? Supply zone will be somewhere here, and then you still be waiting for what, a pullback. You can see, but I didn't mean I was using divergence, and I've gotten the entry at this candle over here, or here, somewhere at this top. You understand? So that is why I always modify my entries every time, the same strategy, the same analysis, same everything. But then when I modify my entry, I always update my student and let them know how things are done. So like I said, I'm just going to explain a little bit of how divergence works, because divergence is something that everybody knows. So I'm just going to explain it at the end of the video. So just stay tuned. So as I was explaining, as a swing trader, should be using was your 4 hours should be like the last point of interest for your analysis, and then your entry. Now let's move to another pair and show you. Then if you had missed this setup here like this, you'd have missed the setup, right? But then, you know, you have re-entries over and over again. You had another break of structure, you had another supply zone over here, and this is a very beautiful trade over there. So once you miss that, take another trade and you hold it for how many days? So the stop loss was around 40 pips, and target 2 is also 1:4. Okay, so you can see if you had held this one for some days, you would have seen 200 pips. So that is it. You know, when you are swing trading, your stop loss shouldn't be tight. This is 46 pips, this is 38 pips, that is 46 pips over here. So this is a beautiful 1:5 and still running. You understand? So this is a very good way to swing trades, instead of jumping into the 15 minutes, jumping into the 1 hour, jumping into the 5 minutes, jumping into the 1 minute, jumping into the 3 minutes, and so on and so forth. And then you are confused because we are not so good at day trading. First things first, start your analysis with the weekly time frame. Check the overall trend. Is it a bullish trend? Is it a bearish trend? Is it a ranging trend? Then you analyze and you wait for what? Wait for setup to play out. Now let's move to Euro CHF. So the same thing on volatility indices too. Volatility indices, you start from the weekly time frame. You just want to stop on the weekly time frame, 24 hours. This is the daily. There's no weekly time frame here, sorry. So let's go to the daily time frame. Still the same thing over and over again. Still the same thing. After the daily time frame, you check out the trend. Now this is a bearish trend, and then now it's trying to shift to the upside, right? It's trying to shift to the upside because that's gotten few mitigations from here and also a few mitigations from here. So now we can say this is bullish, but let's look to the left a little bit for back tests. You can see that is a bearish scenario, that is a supply zone. This is also a bearish scenario, this is a supply zone. Okay, then what do you want to do next? You want to look for entry on the 4-hour time frame or the 1 hour time frame. You don't want to do anything less, since you want to swing trade and then you don't want to stretch yourself watching the markets over and over again. So first things first, this is a break of structure over here. This is a break of structure. Is there an entry? There is no entry. Yeah, there is no entry here. So where is the next break of structure? We have a break of structure below this week over here. Yes, and then where is the entry? We have an entry here, and then that will be the second entry. You can see we didn't get a pullback. Trust me, if I was using divergence, I'd have gotten in at this top. So look at this. This is a very beautiful trade setup, and you can see 1:10, and then the other supply zone we drew. You can see here also, this is more like a liquidity graph to the left. Liquidity graph to the left. This is the supply zone, right? This is the break of structure. This is break of structure here. The break of structure. Where is the supply zone across the break of structure? We have a supply zone here, good, and then we have a supply zone that I've drawn here, and then your pending orders are set. You're good to go. Whichever stop loss fits your style, and swing trading, that is it. You can see. So instead of going down to the 1 hour, 30 minutes, you can see now you can stop on the 4-hour time frame just to get heavy movements. That is just it. The bigger the time frame, the heavier the movements, and then the bigger your stop loss is going to be. That is what you should know about swing trading. Your stop loss is definitely going to be wide, but trust me, the risk reward is also going to be very, 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 very great. Now let's go back to currency pairs, and this is Euro CHF. So let's go to the weekly time frame. Let's go to the weekly time frame to check the overall trend. Okay, to the left from here, it is a bearish trend. Now trying to stylishly, move to the upside. But then the supply, that doesn't mean the supply zones are not active. Okay, this supply zone, this ones are for swing setups. Okay, these supply zones are still very active. Only if there's a strong breakout from the supply, strong breakout, and then there is a demand zone already somewhere here, and the price is reacting to that. Okay, so but for now, this supply zone is still very active. Supply zone is still very active, and yeah, you can see. So I think this is the only thing we should be waiting for if we want to swing this pair, because there is no much analysis on the weekly. There's no much setup rather on the weekly and on the 4-hour. But you can see all these inside setups are what are intraday trades or intraday trades. You can see these are day trades. These are day trades. So now it's trying to move to the upside. Okay, trying to move to the upside. Then you can still look for demand zones, clean demand zones. We have demand zone here. Why is the demand zone? It's an active demand zone. Why? Because there's a valid break of structure, and there is what imbalance to the breakouts of the break of structure. There's a breakout to the there's imbalance. There is strong breakouts here. Yeah, that impulsive move. You can see the movement. You can see the reaction. I don't know why my mouse is lagging. And yeah, so this is the mitigation. It is mitigating already. And then where is the target? Remember, the target is the weekly targets. Now weekly targets for Euro CHF is there. It's over here. It's over here, right? So that is the weekly targets. But the daily targets, where is the daily targets coming? Where is the daily targets? Daily targets is on the daily time frame. That is going to be the daily supply zone. So let's check out for a daily supply zone. Is there a daily break of structure daily supply zone? Yes. And here it is. This is the break of structure. Structure there. Structure below. And now let's move to supply zone. This is the supply zone. And draw the supply zone there. So this is the daily targets, okay, and then the weekly targets is at the top over there. So when looking at this, we have a swing setup already, and then I'm sure this mitigation would have happened on the 4-hour. There would have been a mitigation, entry, breakout, and retests on the 4-hour time frame. So this is the first touch, right? This is the first touch. This is the first touch, the first mitigation, whichever you can call it. Then where's the break of structure? This is the break of structure over here. Then where is the demand zone? This is the demand zone, right? This is the demand zone. So your entry is going to be on that demand zone over here, exactly on that demand zone. You can see there's a drop. Now there's a tap. Now there's also another break of structure. Okay, looking at this, there's another break of structure over here. So now we have two demand zones, right? So for those that love to use extreme demand zone, they'll have they won't have used this, they have waited for this extreme demand zone. But for those that love to use 0.5 risk on half of their risk on each demand zone, you'd have had a loss here, right? This is a loss here. This is a losing trade for a swing trade. This is 1:6 stop loss. Oh, this is a 6 pip stop loss. Wow, this is a 6 pip stop loss on Euro CHF. So you know, I was advising 40 pip stop loss. Since it's a swing trade, advising 40 pip stop loss. Over here, let's use 30 pips, and the risk to reward is 1:6. So the targets should be the weekly targets. Then our target should be the weekly targets, not the daily targets. Again, you understand? So now we are up, and you can see stop loss was not hit, but had it been we were using this extreme demand zone over here, we would have used a better and smaller stop loss. Use the stop loss of 22 pips instead of 40 pips, and we can then target the daily supply zone, which is a 99 pip target with what risk to reward 1:4, and it's almost the same thing as the risk to reward 1:6 for 200 pips. You can see. So these are various ways to swing trades. These are very sweet ways to take your swing trades instead of entering into the 15-minute again, or the 5 minutes, or the 3 minutes time frame. This will, you know, especially when you're not good with all these scalp and swings, it always affects you, and then you really don't know exactly when to enter because of the time and pricing and because of the consolidation inside the smaller time frame. So these are good ways to swing your trade. You can see this is playing out nicely. So you remember, when you're swing trading, your stop loss will be wide, your risk reward should also be wide. Nonetheless, this is a very beautiful trade, and then let's see how it's going to play out. So for those that have been asking, or for those that will be asking weekly analysis, since this is a new year, I'm going to be changing style a little bit. We might not be doing weekly analysis every time, though I'll be doing sometimes. So I'll be dropping more videos, means I'll be dropping more videos, and then I'll be dropping videos based on the algorithm, means based on what people want to watch and what people love to watch. That is why I'm dropping a video on on what's it called, on swing trading, because most people have requested for it, and then based on the YouTube algorithm, a lot of people love to learn about swing trading strategies. So I'll be dropping algorithmic videos on Saturdays. I'll be dropping retail versus smart money, I'll be dropping that every Wednesday, and then I'll be dropping probably analysis on maybe Sundays. So that's like 3 videos in a week, but I'm not promising analysis this year. I'm promising, so the analysis might come in form of retail versus smart money, who's going to win. So I'm going to make my analysis on the retail, and I'm going to make my analysis on smart money. So I'll be explaining everything here. So I won't be doing much in-depth on analysis every weekend. So it's going to be random videos, and I hope you guys are going to enjoy it, because algorithm doesn't lie. Moving to the next pair, this is GBP CHF. So GBP CHF, I'm coming back for you because this is a retail analysis. GBP JPY, I'm also coming back because this is the pair I want to explain divergence. And then Bitcoin, the almighty Bitcoin, let's see how we can swing trade on Bitcoin without having issues or problem. Let me delete everything I have on BTC right now. Okay, BTC is still very bearish to me. You know, just add a little bit of spice to the upside and boom. Okay, now looking at this, let's just use this supply zone as an example. For swing trade, you know, you got in your break of structure. This is the supply zone, right? This is the supply zone. So after getting the supply zone, this is an inducement. I call this an inducement, like that. I call that inducement. And then what do you want to do? Since you've gotten an analysis, you don't want to stress yourself too much. You just want to go down to the entry confirmation and see if you are going to get an entry or not. And moving to the 4-hour time frame, let's see what it has for us. Okay, so moving to the 4-hour time frame, this is the mitigation over here. This is the mitigation, right? Then what do you want to look for? You want to look for a break of structure, just like this, and then you want to look for what the supply zone that caused the break of structure. It is up here, and then your stop loss is going to be where? Should be above this high. Since on Bitcoin we really can't say this is 40 pips or this is not 40 pips, so stop loss should be above the high, just like that. And then you swing your trade. You can see you don't have to stress yourself entering into the 5 minutes, the 1 minute, 3 minutes, 4 hours is enough, weekly is enough, and then the daily time frame is enough. You swing your trade and then you are good to go. 1:3, 1:4, 1:5, 1:6, depend on how long you can hold, depend on how you are used to the pair, and then depend on how you can, you know, foresee or predict the move also. So as simple as that, this is a 1:8 swing trading system, just like that. So what am I expecting on BTC? Like I said, I won't be making videos on analysis anymore, just based on what the algorithm brings. I hope you guys enjoy it. Let's go to the daily time frame. The weekly has nothing much for us here. Okay, looking from here is trying to be bullish, but then the supply zones from the weekly time frame are not invalid yet. Yeah, they are not invalid yet. I think this is the last supply zone. Once there's a breakout from this supply zone, then this is the next supply zone. But then we have entered 45k. So Bitcoin will be very angry at that time, very angry, very bullish. So this, let's just say this is the last supply zone over here, and you know, price is still reacting to this supply zone. But I won't take this as a supply zone. Why wouldn't I take this as a supply zone? Why? Simple as ABC. There is no break of structure. If you look to the left, is there a break of structure? There is no break of structure. No, I don't like this break of structure. The only candle that gave break of structure is this supply zone over here, and that has been mitigated, and price has reacted from it. As simple as that. Price has reacted from it. But looking at this supply zone is not really giving a nice break of structure at all. So I wouldn't say this is a supply zone. Then, for now, I can say, okay, Bitcoin wants to be bullish. Bitcoin is bullish. Looking at daily time frame, then where is the demand zone on daily? We have a demand zone here. Has it been mitigated yet? No. We can call this inducements. We can call this inducements over here, and this is the break of structure. We have two break of structures. This is the first break of structure, and this is the next break of structure. Okay, yeah, so this is the next break of structure. This is the demand zone that caused the second break of structure, this demand zone. But then I'll still love to use the extreme zone, because now this has created more of liquidity and more of whatever, you understand? So when I want to look for entry, what do I want to do? I want to go to the 4-hour time frame. You can also use 1-hour time frame for your entry, but for the purpose of this video, I'm using 4-hour time frame, because the bigger the time frame, like I said, the bigger the time frame, the bigger the move is going to be. And then since you are targeting swing trades, you shouldn't be looking for small moves. You want to look for big moves. So 4-hour time frame is actually very nice. Now I believe you've gotten the hang around swing trading, and you know, moving your way, finding your way around swing trading. Never forget bigger time frame, check the trend. Is it an uptrend? If it's an uptrend, what do you want to draw? Demand zone. If it's a downtrend, what do you want to draw? Supply zone. Now moving to GBP, JPY over here. Don't worry, in the next coming videos, you're going to be watching smart money versus retail, and we'll be analyzing. So at that point, I'll be analyzing the pairs for SMC instead of waiting for every weekend on analysis. So any video I make during the weekend is going to be generally random. Okay, generally random. So moving back to divergence, what is divergence? Divergence is when the price of an asset is moving in a direction opposite the direction of an indicator. So most of the time, divergence is always like, you know, when there's an indicator. Let's use RSI. I don't even know any indicator right now. RSI. Okay, let's just use RSI. Okay, use RSI. And so they said when it's moving opposite. I know people use RSI for divergence, but now I don't use the indicator, but I'm trying to check some stuffs, but I can't get the parameters. I can't get the parameters, so it's going to be confusing. But for me, divergence, you know, sometimes when you have a pair like this, when the indicator is going to show it, the indicator is going to show something like this. This is bearish, right? So the indicator is going to show something like bullish, something like this at this point. Yes, at this point, indicator is going to show something bullish at this point. So at this point, you know that, okay, if the indicator is showing bullish and then the price is showing bearish, then it means that there's something wants to happen either at the top or at the bottom. You understand? So how do you know the exact direction that something wants to happen? That is when you use the trend line. Okay, that is when you use the trend line to draw out the lows, of the currency pair, Then you wait for the top touch in relative to us, the relative strength index. But then I found out that, okay, since we are still using the trend line in confluence with the RSI, I might not really need the RSI. So that is why I stopped using the RSI. I stopped using RSI because I don't know how to use indicators. I just focused only on trend lines, and you can see this is the low, low, then third touch, there is a reversal, the low, there's a third touch, there's a reversal, the low, there's a third touch, there's a reversal. So in my upcoming series, I'll be showing you divergence more, though we always explain it and use it for entries in my mentorship. Students know about all these things, but I'm only explaining this because there is nothing hidden or there's nothing new in the world of Forex that nobody knows about. Everybody knows about divergence. So there's no point in me telling you guys that it's only my mentorship I'm going to explain it. No. So it's still the same thing here also. Divergence, you can see there's a high, the third touch, there's a high, and then there's the drop. Okay. So it all depends on how you use it. Some people don't know how to use it. Yes, some people don't know how to use it. Some people know how to use it, but they don't get the hang around it. So I think that will be all for now. My mentorship still remains 100 USD. Promo has ended, where in the mentorship you get all access to my signals, volatility indices, and currency pairs. I've stopped trading Bitcoin for some time because of the volatility and the uncertainty in the market, but you get access to all my strategies, the supply and demand, the entry, all the forms of entry, plus new modifications like divergence. Okay, I think that will be all for now. Peace, guys. I'll catch you in the next one.